Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's November the 6th. This will be our chart lesson for today. And I'm doing it a little bit early today. It's just a little after lunch, but there's been a lot of trade. Well, I won't say a lot of trades, but there's been some good trades today, and it's really almost a mirror of what happened yesterday so far. A little bit larger range, I think, and a little less consistent ranging, although what the market does is it ranges and then it'll trend and then it'll range and then trend and then it'll trend and then range. And so you can see the range. You just have to switch gears in the middle. There's really no other way around it than to do that. And you got to be real careful when it gets tight and choppy like here and maybe even like here, and just be patient. And somebody else asked me today that the market, it seems like a lot of the second entries fail. And the reason is because it's just so rangy. We're not really trending here, we're ranging. And you can see this was almost, yesterday we traded up in the overnight and then we sold off and then we kind of fought our way up the rest of the day. It's a little tighter range. Same thing, we traded up in the overnight, we sold off, and then were fighting our way back up again, and we're still in the range, the bigger part of the overnight price action. So just part of it lately, and not much you can do about it. So you just have to switch gears. Excuse me, you have to switch gears there. Notice when we were working down right here, and there went a news item. FOMC, there's some speakers today. It's not like your usual FOMC news, but it could affect the market, so be aware of that. But you got your first leg down, so you're looking for your second leg, and that's that. And you see the line right there. And we went a little bit further and reversed right to the almost within a tick or two. So this stuff works. Use it to your advantage. And you don't trade off that. It's just a tool that helps you know where to expect the market to go, possibly, and where it might reverse at. So good stuff. So let's talk about the trades. Again, you can see there was a trend up. There was a break, a move to a new high, and then we sold off so quickly and then kind of went into a trading range. But we traded down into this, so generally you're going to succeed in going out the other side. It's not always 100% because look right here, we traded down into this range, but we went up. But normally during regular hours when you trade into a range, and notice we traded up into this one and now it seems to be trying to go higher. So that's generally the rule. Again, nothing was 100% in trading. That's just the bias and that's what you kind of look for. Um, but normally you want to wait on a breakout pullback. This is a breakout pullback short from this range here. And maybe we'll get a breakout pullback long out of this range. So, um, but that's what we're looking at. Let's talk about the trades. Let me go out a little bit further here and we'll go through the trades real quick and go from there. This was a trading range here, and you just basically got, um, notice there was actually a second entry here, but it wasn't a very good bar. I just didn't like that one. And this one, and that's actually a little bit before 7 too. And this one is questionable as well because it's kind of a trading range or kind of a doji, which is just a one bar trading range is what I was trying to say there. But notice how we had this low and then we came back and that's like the double test of that low and then you went higher and there's two legs here in the first leg and this is like a little failed break lower. Notice that it broke below that and closed back in here. So this one really probably should be green. I'm going to change it to green. And it was a trade of the day. Look at it go. And really took off there um, like a rocket almost. And just really shoots up there. And really great trade. And then you get a two-legged pullback. This is not a perfect setup bar, but it bounces right off that possible trend line again. And a lot of times if you get a break in the overnight hours before the regular session opens, sometimes the market will almost ignore that and the trend may keep going. So when it bounced here and it gives you a second entry long, you might have wanted to use a limit order here, but you didn't have a whole lot of time. And at that point, I was even thinking a possible measured leg here. We didn't get anything like that, but of course the day's not over yet either. But generally, you're not going to get another big sell-off. So this is what I was. So when you don't get this, that's why that generally means you're going to move a lot further in the other direction. And you can see we had a pretty nice downtrend. So um, that's one of the clues. If you don't reach that target and the trend switches, now you might get some sell-offs and some flat stuff. But as long as the market doesn't really start trending the other way, you're still looking for that possible target. But once you start selling off like this, forget that target and realize that, hey, we came up way short. We're probably going in the other direction. So that's another clue to start looking for the downside. So, but I like this trade. I didn't see any way to get in this one. Just no way to do it. I think that, you never got a break higher or anything. So I think you're really risking it trying to get in here. And there's a possible trade right here to the long side. And there's even a possible short here because you kind of get that, but it's not a failed, it's a failed second entry long if you're counting off the high. But look at all that overlap and stuff. I just think it's too risky. It's right at the EMA. There's too good a chance that we go back and test this high again. So, and then you come to this. I'm actually going to change this one to green because you don't really have a range here yet. This range is, you're coming back and testing this breakout area from this range. See, that's another thing too about these highs. That might have been a clue that prices may come back, but sometimes they don't. But anytime you have a price range like this, prices will usually come back and retest it, and that's what they're doing here. So they're coming back and retesting it. But look at this right here. Notice that it broke lower here and turned and went out the upside. So you got a little bit of a double bottom, but it's a first entry. So it's just not a great trade. And then by the time you get this one, it's back into kind of the middle, and there's not a lot of room here. So I didn't like any of these really. They're just not very good setups. But if you drew this line here and drug it up, you had to be also thinking that, and you drag it up here, you're thinking that we're probably headed over to here before we sell off. So I did like this one because it's a nice bearish reversal bar, and there's plenty of room back down here. And then now you got enough knowledge to think that, hey, it's probably a trading range. But this one I was not too sure about because the bias is still really down. You don't have a new low yet. You're trying to make one for this little trend line right here. And plus there's a chance that this other one, you could find this real quick off those two lows and drag it up. You don't know what's going to happen until prices get there. But that's what I thought prices were probably trying to work to. But the bias is still down at this point. And so I was just a little leery about taking any longs across here. And I'll give this one because of the little trap and the fact that, prices are probably going back to the EMA. And at this point, there's still a chance that this bigger pattern's in play. But once you get hung up in this, you got to be real careful. And again, this one I drew green. You did get to the line. Actually, originally I had the line there, and you see you don't quite get there. But if you draw it off the highest close, that gives you a perfect touch there. And there's plenty of room to get back down here. So this one, and it's real obvious there's a range here. So even if you don't see the bigger channel working down, you got the range to play the range, and you got to play the range rules. And you break lower here, you pull back. So that's a breakout, and this broke out higher first and then turned down. So I liked it for a breakout pullback short. And then, of course, I showed you how to get the measured move. And so you're expecting prices to maybe come down to here if they keep going lower. But all it was is they were bouncing off this midline here, and we had to finally work through. And even then, we came up short of the lower trend line there, or trend channel line, I should call that, because the trend line's up here. But I like that short. And then you went into this, it's just another range. So you got to go back to the range rules. And the bias is down. We're traded down into all this. So you're not, there's no chance to get long anyway here. But you get this little bitty doji that breaks out and turns, and it almost closes on its low, so it's rather bearish. I like that for a short, just thinking, back down to maybe looking for a measured, back for your bigger measured move, but you could also be looking for a measured move off of that right there. And so that's down to here. So you got a lot of room, and you got room back down to these lows. So, and this is with a trend, and notice how everything's below the EMA, but notice this too, you got a first entry pullback. It's a failed second entry long off of that high. So that's another reason. So there's several reasons there to think about that going low, and that when you get multiple reasons, then there's a better chance that that trade's going to work. There's another breakout pullback short here. So you might have even thought about going short here, but it was right into that line, and I wasn't sure that we wouldn't come back up here before making another move down. So I just don't think it's a good idea to be going low right there, going short right there at the very low of the day, which that would have been at that time. So it's just a little risky. Anytime you go short at the low of the day, because a lot of times it'll break one or two ticks lower and then reverse and catch you off guard. So I didn't like that one. But you come on down, you're bouncing. We're not back up to the trend line, so you don't want to go short yet. There's actually a short here I missed somehow. Put that on there before I forget, because there's a short there. Again, it gets a little rangy, but the bias is down here, so that's the reason this is green. But coming off the low here, you expect we're probably going to try to come back up to here, so you got to be real careful here, and you got to have a good setup here. Notice that this is just a little doji. It's got more of a bullish tint than a bearish tint. I don't recommend, even though it's a second entry short, I don't think it's a good one. We came up a little short here, so the odds are we'll come up about that much short here or about that much over. And we really just barely broke out there. We didn't even get a close outside of it, so you can't even look at that as far as being a break. But I just think the bigger range is taking over down here, and you're finding support, and plus you got that measured move. So that was the real clue to be thinking, be careful, this thing could reverse because you had your measured move. If you look across here, that was the previous lows from the previous afternoon, and you can see that's kind of been an important area right down in there all day. So there's a lot of reasons to look for a bounce there, and I tend to held. So, but when this second entry short failed, I liked it to the upside just to get a scalp back up to, at the very least, to here. And it is somewhat of a counter trend trade, but for the reasons I just explained, I liked it. I took this trade, so that's the reason I like it. And all it was good for was a scalp, and it turns right back down. And you also should probably have your short-term trend line on here. And notice the break and the new high, so that gave you a reason to go short right there. You can see that little channel working up right there. And then you get the break, the new high, and it's right off the main trend line, so that's your bigger picture. And nice easy scalp. That's not the greatest signal bar, so what you want to do is let it break lower first, and then maybe use a limit order, or wait till it breaks below this bar and try to get back in and it, because this gives you a little better clue that it is reversing here. Plus you get a little 2-bar double top. And I went back and forth about whether or not to make this one green or not. It's real close, but I think you got to understand that the best trades, and this kind of confirms this trend line, and we hadn't had a close outside of it yet. So the odds are we're headed lower, and that's what it tells you. So you take the trade. It does work, even though we don't go lower, and then we reverse. And when we made this little one tick lower right there, and then it turns up and goes out the other side. I really like that. I don't have a line on here, but you can see when that closed right there, that's kind of and you might even move it down another one, same thing, and you get that little 2-bar matching low, and you get that one tick lower, and it goes out the upside. I figured you got to figure then that, hey, maybe we're going to get the break of the trend line here, and you got the strong support. So I like that one to the upside. Then notice that's a new low. You get a first entry pullback. There's a second entry short here that fails, so you get a chance to go long. I'm not crazy about that long because there's so much overlap again, and you've moved a good bit. You've been away from the EMA for a long time. But if you're aggressive, you're probably going to take that trade. And you could put your stop right below it, and you never got triggered, and it goes higher. But if you missed that one, uh, you're definitely going to like this one because that's a and there's that little two tries. It's the failed second entry short, but then you get that one more little attempt to go lower, and you can see everything bouncing off that line, and it goes higher right there. So that's a new high, pullback first entry, pullback second entry. There's not a lot of room for that high, but the more important high was up here, and you got enough room for it. So I like that one. Once it didn't go much higher, and it pulls back. This is like a breakout pullback long, but it's kind of in the middle. It's kind of in the middle of the trading range, and it right here. And it's a first entry. There's 3 bars in a row, a couple of the doji. I just didn't like it. It would have worked, but I think you're risking it now that you're back up here so close to this, and you've already reached that level. But it does go higher. It would have worked, and then you kind of get hung up in another one of those little ranges, and it breaks out, tries to go higher, tries to go down again, and you get that little failed second entry push lower right there. And guess what? That bounces right off. It goes lower below that red bar first, and it bounces right off the trend line if you drew a second one. And this is kind of it's smaller, but it's almost a repeat pattern of this. And we talked about repeat patterns yesterday. Look at that. Um, and you get that right here, and um, turns up off that line. Notice the break down here, and it looks like we're going to break, but then you get that bounce off that line, and you had that same thing, the break, and it bounces right off that line on a nice setup. And so I like that one. Just enough for a scalp, no more. And then it pulls back, and it goes through all this again. Another little trading range. This one was real iffy, but notice the bigger possible. You got a double top, now you got a double bottom. They really tried to take it lower here and couldn't. So when that broke lower below that little double matching and then turned up a break above, I was looking for that here. It never got the break. So if you get it again right here and you get the break, and so I like that one for kind of an aggressive because it is a lot of overlap. But this is the lows of a bigger picture if you see that, and there's plenty of room to get out before you get up here, although it comes back down off the trend line and then gets another shot at it. And you see we're still trying to work higher here. And then now you test that line one more time, and it holds and turns up, and notice that high right there. Pull back first entry, pull back, it's a second entry long. That's a little bitty doji at the bottom of a trading range on a second entry. Counting with the move up. We're looking for a retest, a new high anyway. There's just a lot of reasons to go long right there. And that's just a very low risk trade. You put your stop right under there, a tick or two, and you're only risking 3 or 4 ticks to get in. And so it's a nice trade. And that was the last one I marked. Although there's a failed second entry short there, you got to be careful going long into that one. So that's a trap. I'd probably almost want to mark that blue looking at it after the fact, but prior to that I'd probably say it's a little risky going long there. Okay, sorry I had a little interruption, but notice that that's like a new swing low because it's lower than that one. That's like a little 2 swing down. So you get a first, counting off this low, first entry short, pull back second entry short. It fails, so I got a little double test. But it's so close to those highs, and that's, it's a little risky, but it is a trap, and those usually work, and that's generally what they try to do. If they can't get through an important area, they'll set up a little trap, and then that trap will help push it through from the momentum of all the trap traders having to exit. I mean, that's very common. for them to do that. It looks like they tried to do it to the downside. They kept trying to go lower here, couldn't. So then they look like they're going to take it higher, and they try to trap people, but there's just too much buying in there, and it works higher. But notice we traded up into this, and so the odds are when we break higher, we're going to break to the higher, or when we break out, we're going to break to the higher side successfully. That is so. And that's pretty much it through the 1 o'clock hour today. Um, just again, it's real typical of what we've seen the last few days. Nothing much different than we've kind of seen all week. So, and I think I already mentioned it, but one trader said, it's been harder because I really like second entries and more of them have failed. And you got to be aware of which way you're going. I mean, there's a good second entry right there. You get a second entry right here. Works. You get another one right here that works. Actually, there's one right there, but you can see not to take that one right there because of all the overlap. So this is like a little two-legged correction in between. I see there's one right here, but again, look at all the overlap. This one failed, and I circled that one in lavender for a reason. Just stay out right there. That's a good reason to leave that one alone. There's another one that fails here, but it's not a great setup, and I talked about why you'd want to be careful about going short there, especially after you've had that measured move, and it's kind of in the middle when we're looking for prices to come back up here. Some different reasons why, if you start to see that overlap, the odds are just stay out of it. And then we start going higher. We just haven't had a lot of second entries on the way up. And so there really aren't that many that there's still a lot of good ones, and the ones that failed, there's plenty of clues to understand why they're failing. So it's just experience, and even then, you're gonna make mistakes. It's part of trading. Just don't give it much room. If you took every second entry today, you would have already been done before the first one really failed, and you would have already had. And so then you get one that fails, and you just don't give it a lot of room. When it fails, it fails. And a lot of times when they fail, if it's failing counter trend, you want to be going the other direction. You shouldn't be taking a counter trend one anyway in most cases, unless you're trying to be real aggressive, and then you got to take everything if you're going to be aggressive. So I hope that makes sense. But there's some good learning lessons there, and hopefully the gentleman that sent me the email watches this today and sees what I'm talking about and understands what I'm talking about. And if you don't, or if any of you don't, even if you didn't send me an email, if you don't understand it, feel free to send me one, and I'll try to answer it for you. So I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.